Hey guys, what's going on? My name's Jason. Today we're going to bring you guys a great update on AMC and what happened today. I'm super excited though. Today's ending was wild, crazy, and we're going to go over that. If you could, make sure you hit the like button below if you're not a sub. Hit that sub button, hit that little bell notification, and we'll get right into it. You're earning the chart I'm using here. It is Webull. There's a link in the description. You can get 2 free stocks when you put $100 in. Sign up. You can also buy, sell, and trade stocks 4 hours before market, 4 hours after market as well. Guys, have you seen this? Look at this. Look at this. Look at this crazy day we have had today. It's been up, down, all around. And you might be wondering, why was it like this? Why wasn't it up? Well, the market has been a big bag of you know what. We've been fighting this these 10-year and 5-year treasury rate numbers, which has made the market just a big mess. As you can tell, we even pull up Apple here. You can even tell on Apple, we had some up, and then Apple at the end of the day shot down as well. It's almost like the same chart right here at the very end. Apple did the same thing. Same thing with Neo. The list goes on. So it's not just AMC. It's not GME. They both did this at the very end of the day. They shot down, and then when it shot down right here, it got kind of scary. You can tell right here, guys. We were all live today, streaming live. Some of you guys probably seen this live, by the way. Power hour hit. We went up a little bit. During that last little power hour, we were powering up, not for long at least. And then we had this downturn right here, and it went down, and it went down, and when it went down here to $7.81, and most of you guys know we needed to cover above 8 today to be within that strike zone of the call options above $8. Obviously, finishing at $9 and $10 would have been even better for the call options, making a lot more people buy back in, causing that gamma squeeze. But $8 is going to help out. It might not be as big a gamma squeeze as we thought it would be if we got to 9 or 10, but could still be a good gamma squeeze. And a gamma squeeze, again, can lead over into a short squeeze. So we dropped down to 781, and we were live, and I was like, well, I got to buy some more. So I loaded up some more real quick, and I guess a lot of other people probably in chat did it too. And at the very end of the day, we squeaked by at $8.01. Now, what does that mean? That means people that had $8 or below on the strike prices on the call options can buy in on those options now under anywhere from under $8 and below those can be bought in now. Obviously, we finished at 9. We could have got the people at $9 strike price. If we could have finished at 10, we got the $10 strike price. But again, we've been fighting the markets the last couple of days, and the markets have been rough, especially, like I said, again, with those treasury rate bonds being so high in the interest, it makes the stock market fall. And we've been fighting that a lot the last couple of days. So honestly, for AMC to finish above $8, very, very promising. And Monday, we could see a nice little gamma squeeze. As you can tell right now, we are at $8.13, 14 cents. Now, you may ask, what happens if we go below $8 in aftermarket hours? Which we only got like 30 more minutes to do. It wouldn't matter. What matters is what happens during the market hours. So if we were to fall to say, $7.99 or $7.98, that still falls within the strike price because this ended at $8.01 during the day of trading. So this right here, this is what that number, the red number up here, which to us means green, money in the bank at $8.01. It might be red right now just because it was down 3% over yesterday. Again, though, it was a rough day in the market. A bunch of stocks were down today overall. You can tell over here there's a lot of red. Apple is up a little bit, obviously. There's some aftermarket pluses, but there's a lot of red over here, as you can tell. So this being above $8 is great for call options. That's going to let people buy in. And when I mean buy in a lot. So we can pull this up really quick on the call options right here. As you can tell, at $8, there's 50,897 call option contracts. Then you got 35,000 right there. At $7, at $6.50, we got 23,000. And at $6, we got 15. And then at $5, you got 10. And then 5, you got 4. These numbers down here a little bit, but still. So we got about 100 and something thousand call option contracts to be filled on Monday. So what's that mean? That means all these call options have a chance to buy in. That right there would equal about 10 million, maybe a little bit over 10 million shares to be bought right away. What's that going to do to the stock? That's going to shoot that stock up and cause a gamma squeeze. Now, a gamma squeeze could ultimately lead in over to a short squeeze. A gamma squeeze, you could see maybe $15, $20 again. And that right there can also blossom into a short squeeze. and that right there blossoms up higher and higher and higher. That's how you got to where, say, GameStop was before. I'm not saying this is going to be like GameStop. I'm not saying this is going to be even near like GameStop, right? If we got to 30, say $30, $40, I would be happy realistically, right? That'd be amazing to see on Monday. But if we go higher, that's even icing on the cake. Then I'm even more happier about that. Now, you could see if we would have finished at $9, we could have had 32,000 more in the bank, right? That'd have been 32,000 times 100. Then if you would have seen, say, $10, we could have had 39,000 more shares in the bank times 100. Now, right, that would have been awesome. And again, though, we were fighting against the market today, and the market has been rough. I think most of you guys have been around for this last week, but you can just go to the week and look at this downtrend. Today, we had a little bit of up. Obviously, same thing with AMC yesterday during pre-market. We had some pretty good moves, right? Obviously today, but since then it's been pretty much downhill. We fought. Now there could have been some manipulation here on AMC as well. Let's be honest. This at the very end right here, it was very suspicious. You know, we went from really good to boom. The whole market did it though. Again, we had Apple doing it. Again, there was just so many doing this, and it seemed kind of weird that like almost every stock had the same problem. But again, we were fortunate, and we ended over $8. Which obviously we can take that to the bank come Monday when these people buy in their call options. All right, now I want to show you guys, this hasn't been updated in 8 hours. I'm pretty sure the short shares availability is probably a little bit lower now, but obviously at 8 hours ago, it was 1.2 million short shares availability. I would say it's probably more than half of right now, at least probably around like 600 to 700,000. Right now, the short borrow fee, which was updated an hour ago, is at 4.29%, which is good, again, and going up. I know it was at like 6% yesterday, but the day before that, it was like 2% and then 3%. So obviously it's going up. Obviously it's going to go up and down a little bit due to what kind of price point we have. So at $11 yesterday, that's 6, point whatever percent it was probably about right. At the price point of about $8, $8.50 or so, 4.29% is pretty good. Again, obviously the short shares have gone up a little bit. That was 8 hours ago. I'm pretty sure this is down though by now. I also want to add this real quick though. I know a lot of people ask me what is a call option in the money. I want to read this word for word. That way I don't get anything wrong and spread some kind of misinformation, which I know this is. Again, a call option is in the money when the underlying security current market price is higher than the call option strike price. Obviously, we got above $8 today, which means that, those are in the green. Those are in the money. The call option is in the money because the call option buyer has the right to buy the stock below its current trading price. When an option gives the buyer the right to buy the underlying security below the current market price, then that is the right has intrinsic value. The intrinsic value of a call option equals the difference between the underlying security current market price and the strike price. A call option gives the buyer or the holder the right, but not the obligation to buy the underlying security at a predetermined strike price on or before the expiration date. In the money describes the moneyness of the option. Moneyness explains the relationship between a financial derivative strike price and the underlying securities price. A call price is in the money when its underlying security current market price is higher than the current option strike price. Just like I said, anything below $8 right now got in the strike price, which is in the money. Being in the money gives a call option intrinsic value. Once a call option goes into the money, it is possible to exercise the option to buy security for less than the current market price, which was what happened Monday, which could cause that gamma squeeze because there's about 10 million shares being bought pretty much at once. As a practical matter, options are rarely exercised before the expiration because doing so destroys the remaining intrinsic value. Simple explanation. For instance, suppose a trader buys one call option on ABC, we can say AMC, with a strike price of $35, let's say $8, with the expiration date 1 month from today. If AMC's stock trades above $8, the call option is in the money. Suppose the AMC stock is trading at $11 the day before the call option expires, then the call option is in the money by $3. The trader can exercise the call option and buy the 100 options of AMC for $8 and sell that share for $11 in the open market. So to recap that real quick, that means all these right here you see in the green, will be executed come Monday. So every one of these is times 100, right? It is times 100. Each Each option, one option equals 100 shares of AMC. So you'll see all these right here get executed on Monday. People will buy in, and that will shoot the price up to say anywhere. Let's just say it shoots up to $15 in a gamma squeeze. Let's say $20 in a gamma squeeze. You know, nobody knows where that's going to go. It could go high because once you have a gamma squeeze and could, again, this is a could hypothetical thing. Could, again, I want to say could cause a gamma squeeze. And if that gamma squeeze does happen, it could cause a short squeeze and we could see this price boom. I'm super excited for Monday and I can't wait for this to happen. I can't wait to see what happens. Again, we bought quite a few more shares today, around 100. I bought another 150 shares today just to help pump up some more at the very end because I was scared when it said $7 and like 80 something cents. I was like, oh God. So I bought in even some more. So as of right now, Monday is the day. I'm super excited to see what happens. If you guys could hit the like button below, and I'll see you guys in the next one.